Hello, welcome to CDH's YouTube channel. My name is Ko Fujimoto. Today I'm going to talk about how to minimize tax risks when allowing employees to work remotely overseas. I am going to talk about two major risks and how to avoid or how to minimize them. First, there are many cases where your employees say to you, can I work in Japan? Can I work in Mexico? Can I work in Singapore? Or can I work in Europe for you? I can do that because of the internet. Well, if that happens, one of the two things that you must consider is PE, fixed place of business. A local country's tax authority may consider your employee working remotely in a local country is a fixed place of business, fixed place of your business. In other words, is your company doing business in a local country on its turf? It's called permanent establishment, abbreviated as PE. Okay, Mr. Fujimoto, what's wrong with PE? What's the consequences? Well, there are significant consequences, just like a case where you go to other states and then set up your own business from Illinois to Indiana, New York to Connecticut, or New York to New Jersey, and so forth. What you need to do, you need to register and you need to start paying taxes, and that's a headache, administrative burden. It's a major issue. Obviously, there's a case called Wayfair versus South Dakota, argued and decided in the Supreme Court. Though now we are talking about overseas, okay? So I think a local country's tax officer or tax authority may want you to register, may want you to start paying taxes, and that's a headache. How do you determine if your employee or your agent constitute a PE in a local country? Does he have an office? Does he control inventory? Does he maintain the inventory? Can he sign contracts on behalf of you? Or can she purchase goods, raw material for you? These are the consideration of determining if a person constitutes a permanent establishment. Obviously, you want to avoid being permanent establishment. Where you need to look at is two locations. One is U.S. tax treaty. Typically, Article 5 of U.S. tax treaty with a local country, let's say, for example, Japan-U.S. income tax treaty, Article 5, PE, permanent establishment, it's defined. You can take a look at it, and it's a difficult language to understand, but you can get assistance from your CPAs and understand the meaning of this PE under the context of income tax treaty. If there is no treaty, then you should look at local country's PE definition. I'm sure there is one. So that's how you start investigating or researching the permanent establishment risk, because you want to avoid being permanent establishment. Do it before you allow your employee work remotely overseas. Let me talk about the second issue. The second issue is double taxation. Before I talk about the double taxation, let me just distinguish two types of obligation. If a person is an employee, legally, if the person, an employee, company has obligation to withhold Social Security taxes, Medicare taxes, and income taxes, and with employer portions, Social Security, Medicare, company or employer needs to submit the money to IRS. On the other hand, if a person is classified as an independent contractor, sometimes it can be an agent, then he or she must pay self-employment taxes, and if there's a taxable income or tax due, quarterly ES tax payment by himself. That's independent contractor's obligation. Employee, U.S. employer has a legal obligation to withhold Social Security, Medicare, and income taxes and submit that to IRS. Well, there's another concept called leased employee. It's a completely third party independent company in a local country hires a person, and you pay, or U.S. company pays a fee to the company to lease the employees, and that is obviously beyond the scope of my presentation today, so I'm not going to talk anymore. So with with having employee independent contractor distinction cleared, completely distinguished, and I assume now this person would be my employee or this person would be my independent contractor. You understand the different degree of responsibility. At any rate, either employee or independent contractor, somebody must pay to IRS, right? Somebody must pay to IRS. And I'm talking, obviously, a person is a U.S. citizen or U.S. green card holder employee or person, green card holder, independent contractor, they must pay taxes to IRS. Because wherever they are U.S. tax resident. And at the same time, depending on this person's lifestyle, how they work, and so forth, he or she may be obligated to pay both social welfare taxes and income taxes to local country tax authority. Since this person's income source is only one, if you look at the arrow, there are too many arrows here. So there's a double taxation. How can you, as an employee, help this person avoid the double taxation? Or how can you, as a person who work remotely, avoid double taxation? As far as the income tax double taxation goes, there are two ways. One is foreign earned income exclusion. In 2023, you can exclude up to $120,000 of local wages against the taxable income on your 1040. And you also have a tax rules called foreign tax credit and offset against your foreign tax paid against two, maybe my English is not completely accurate here. Anyway, US taxes here, local taxes here, one same income being taxed, offset, net, eliminate the duplication. Well, let me clarify this. There is no guarantee that you can completely eliminate the duplicates, okay, because of the intricacies of foreign tax credit system. So don't be too optimistic about double taxation side. Now I think at this stage you need to get your CPAs involved and start estimating, forecasting the taxation, income tax amount in a remote work environment. Of course, I think there is foreign, maybe there is a foreign, most likely there may be foreign tax credit system available in a local country's tax system, since there are so many countries which I have no grasp of every single country's tax system, I can't really talk any further. But typically, I think many U.S. expatriates, is that right word? U.S. person working remotely overseas take advantage of both foreign earned income exclusion and foreign tax credit on his or her 1040. Okay? Now, let's look at social welfare taxes. Again, this is another double taxation because you, as an employer, if the person is employee, you must withhold Social Security and Medicare and take the same amount from the company's chest and then submit that to IRS. If you are an independent contractor, you must pay self-employment taxes to the IRS. Now, also you may be paying social welfare taxes or public pension payment to a local country because you live there or because your status and so forth. So I suggest that I would look at the U.S. Social Security Agreement. The U.S. has similar to income tax treaty. I think U.S. has many countries agree to have this social welfare or social security agreement because to make the business, less burdened because of the pension payment. So you don't have to carry two systems pension payment that would really push the business activity down. Now, so there are many U.S. Social Security agreement with the local countries, like I said. So let's please take a look at that Social Security agreement if there is one with a particular country and look for ways to eliminate double taxation of social welfare. For instance, the Japan-U.S. Social Security agreement has a clause where the the document called Certificate of Coverage will or may exempt people from paying other countries' social welfare taxes. And of course, you should really refer to local rules too if there is no Social Security agreement with the U.S. I hope I shed you some light about how to start reviewing or how to start approaching your employees' request of, hey, please let me work remotely overseas. If there are some ideas that you have in your mind, I hope I was a little bit successful in this video. So thank you very much. This is a disclaimer, and this is our ending page. It's a CDH, it's cross-border individual tax practice. If you have any questions, please contact us using the description page of our YouTube. Thank you very much for watching and see you next week. Take care.